You're watching a trade clear in real time. No press conference, no signatures, no flags behind podiums, just silence followed by movement. China steps back. The US steps forward. Venezuela goes dark. Taiwan lights up. This is how empires actually negotiate when the cameras are off. What you are witnessing is not diplomacy, it is settlement, and gold is the collateral. Let me be very clear before we go any further. This is not about ideology. This is not about freedom or democracy or rules-based orders. This is about balance sheets. It's about who controls the hard assets when the paper promises finally fail. China agreed to stand down in the Western Hemisphere. The US agreed to stand down in the Pacific. Venezuela for Taiwan. Oil and gold for chips and sovereignty. That is the trade. And once you see it, you can't unsee it. Think about Venezuela for a moment. The largest proven oil reserves on the planet. Massive, underdeveloped gold deposits sitting under a failed state with a collapsed currency and no real allies left. For years, it's been frozen, untouchable, sanctioned into paralysis. Now ask yourself why the tone suddenly changed. Why enforcement whispers replaced regime change rhetoric. Why backchannels started heating up. Venezuela isn't being rescued. It's being liquidated, and gold is at the center of that liquidation. Now zoom out and look at Taiwan. For decades, Taiwan was the leverage, the choke point, the single most important piece of real estate in the global tech supply chain. If China moves, the world freezes. That was the old math. But the math just changed. The US doesn't need Taiwan the way it used to. The fabs are already moving. Arizona, Texas, Ohio, billions in subsidies, emergency buildouts, redundant capacity. Not perfect, not cheap, but sufficient. Sufficient is all that matters when you're negotiating it at the imperial level. So China asks a simple question behind closed doors. What happens if we move now? And for the first time, the answer isn't global collapse, it's disruption, pain, volatility, but not death. And when collapse is taken off the table, everything becomes tradable, including red lines. This is why gold is moving the way it is, not because of CPI prints, not because of rate cut fantasies, not because of retail demand in India or China. Gold is repricing because it is being repositioned from a reserve asset to a settlement asset. It's no longer insurance, it's payment. Watch what happens next. Venezuela's gold doesn't hit the open market. It doesn't flow through London spot desks or Swiss refineries the way you think. It moves quietly, state to state, vault to vault, debt to asset. The US doesn't need the oil immediately. It needs the gold. Oil keeps the system running. Gold resets the ledger. And while everyone is distracted by missiles and ships and speeches, the real action is happening in the vaults. Central banks aren't buying gold because they're afraid. They're rebuying gold because they preparing to settle accounts that can to be settled in dollars anymore. You don't invade with tanks first, you invade with balance sheets. Tanks come later if the spreadsheet doesn't clear. This is why the price action in gold feels wrong to people who are still trading it like a commodity. Gold isn't trading supply and demand, it's trading trust and exit velocity. Every ounce that moves from the open market into a sovereign vault is an ounce that will never come back at any price. That's the part no one is pricing correctly. Look at the screen and you'll see a number, but that number is a lagging indicator. The real price of gold is being set in bilateral agreements, off-market swaps, and silent transfers. The screen is the echo. The deal is the sound. Now let's talk about what this means for you, because this is where most people make the fatal mistake. They think geopolitics is entertainment. They think it's noise. They think it's something to argue about on social media. Meanwhile, the largest wealth transfers in history always happen during geopolitical realignments. Not after, during. If China moves on Taiwan, capital controls follow. Not just in Asia, globally. If the US moves on Venezuela, sanctions don't disappear. They mutate. New frameworks, new exceptions, new rules written overnight. In that environment, paper claims are the first thing that gets questioned. ETFs, unallocated accounts, promises of delivery, all of it becomes negotiable. Gold doesn't negotiate. Gold doesn't care who wins the press cycle. It doesn't care about alliances. It sits there and waits for the reset. And the reset is coming because the current system cannot absorb this level of geopolitical stress without breaking something fundamental. You're going to hear that this is bullish for stocks. You'll hear that defense names are the play. You'll hear that chips are safe now, that America is insulated, that supply chains are resilient, that this time is different. That's what they always say right before the repricing phase accelerates. Here's the reality. Every time the world moves closer to multipolar conflict, gold stops behaving like an investment and starts behaving like an exit. An exit from counterparty risk, an exit from jurisdiction risk, an exit from promises that depend on someone else's solvency. The most dangerous position right now is not being wrong, it's being liquid in the wrong form. Cash looks safe until it isn't. Digital assets look portable until a switch flips. Paper gold looks convenient until force majeure enters the chat. When states start trading territory for assets, you are already past the point where polite market assumptions apply. This is not about buying tops or bottoms. This is about understanding that gold is being repriced from a confidence system to a necessity system. When necessity takes over, price targets stop mattering. Availability matters, access matters, jurisdiction matters. You don't wait for confirmation in moments like this. Confirmation comes after the move, when the price is already out of reach and the rules have already changed. The people who survive these transitions aren't the ones who predicted the headline. They're the ones who positioned before the headline was allowed to exist. This trade you're watching didn't happen overnight. It took years of preparation, years of fab construction, years of gold accumulation, years of quiet signaling, and now the settlement phase has begun. Gold isn't reacting. Gold is being called up. And when gold is called up, it doesn't ask why, it just moves. Hold what you can hold. Understand what you actually own. And don't confuse a number on a screen with control over an asset. History isn't slowing down. It's accelerating. And gold is no longer optional in a world where empires are back to trading land, a resource